Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on PCLN NVDA TSLA NFLX CMG daily weekly time frame. Big bear day on Friday, the tech sector getting hit the hardest, but some of these big names that have been doing very well saw a lot of profit taking. And that's because we saw a lot of profit taking in the tech sector, which has been running the market to the upside. So these lead bulls that have been on absolute fire in all of 2017, we definitely saw some bulls get a little bit scared, want to lock in that profit and exit. And we saw some bears jump in. So PCLN, big bear drop to the downside. As soon as we broke 1878, that was a bear signal that another leg to the downside was coming. And we see big bear volume, bearish MAC decross. So we are looking at the 50-day moving average support for now, and that is a key support because we did bounce off of that at the low from the earnings reaction, and that level is at 1825. So we need to keep watching this level, and if we lose that level of support, we are looking back down here to 1791. So that is going to be what we watch tomorrow and Tuesday. What kind of momentum do we see to the downside? We don't see much of a lower wick here on Friday, so bulls weren't buying the dip very significantly. So if we do see a bounce, I'm going to be looking for a lower high to be set because the bears very clearly established themselves a bit. But what we do still have here is an equilibrium pattern. We have our high, our low of the pullback, lower high, and potentially a higher low now. Again, we have to see how Monday and Tuesday go. But we're watching this pattern, and we're watching the 8-period exponential moving average support on the weekly. That has held since 2017 began, and we bounced off of it multiple times. If we lose this level next week, it will be significant, and we'll be keeping our eye out for a trend change, and that trend will change if we lose 1791 support. So a clear higher low pattern on the weekly time frame, and that will be in jeopardy if we lose the 8-period exponential. NVDA has been an absolutely huge bull and a huge move to the upside with new all-time highs to start Friday and a very big turnaround. I personally would not be buying a second gap up in a row, even though we're at all-time highs. That's too extended to the upside. You don't want to be buying into a second gap up to initiate a position. Unless you're day trading, that's something else. But if you're looking to initiate a position, you want to enter on consolidation, not on a second gap up in a row. So we did see a bunch of profit taking. We do still have the middle Bollinger Band of support. And because the bulls have been so strong, they have a lot of wiggle room in terms of breaking the uptrend on the daily time frame. We're not close to breaking it. We had support down here, a low of 142.05, and we bounced off of 142.75, so still a higher low, middle Bollinger Band support. And same thing, we're going to be watching what kind of momentum and follow-through do we get to the downside on Monday. If we break 142.05 and the daily middle Bollinger Band, which will be in the mid-141s, we will be looking at a bit of a setback for momentum, but overall, the weekly time frame, it is a bearish reversal inverted hammer. A red week this coming week will confirm it. We've been above the upper Bollinger Band 5 weeks in a row, and losing that level would indicate here comes consolidation. So pretty much a red week, and we're looking for further downside. But again, anything above 120 is still an extremely strong weekly chart, and we have that double top here where 120 was the all-time high resistance for a while, so we will look for 120 to be support. But again, that's assuming a $30 pullback. That's just showing how much wiggle room. Again, I'm not assuming a $30 pullback. I'm just pointing out how much wiggle room we could see to the downside before we see a change in the weekly trend. Tesla also seeing profit taking, bearish engulfing candlestick, high bear volume coming from the all-time high. Same thing, we have tons of wiggle room. We still have exponential daily support. We can pull back, and as long as it's above 334, we maintain higher lows, keeping those bulls in control, and we'll be looking to see if that pattern can continue to play out. So the weekly time frame saw an upper wick of profit taking, but not significant enough to be a bearish reversal candlestick because the real body of the candlestick is too big compared to the upper wick of the candlestick. So the upper Bollinger Band still support on the weekly time frame, but this is a wake-up call to the bears. Friday pretty much was a wake-up call to the bears that is going to say, okay, time to come out of hibernation. We might have some downside momentum here, and Monday and Tuesday is going to be very telling to see what kind of bullish response, what can the bulls put together here, and if they can't pull together anything, then we know that we're going to see further downside. Netflix, big time pullback. taking back 3 weeks of upside in one bear day. Higher low still here. 153 is very key support. We formed a higher low 154.50. The 50-day moving average is support. A little bit of a lower wick. Bulls buying the dip. Not very significant. Again, in all these videos that I'm making tonight, I'm saying if we see the bulls show up, we're scouting a lower high to form and a bearish entry. And if we see a break of the low that we saw on Friday, we know the bears have that momentum. So pretty much, we're just patiently waiting for some more significant bearish action. It's just a question of whether or not we step back, let the bulls buy it a little bit, and then jump in, or we jump right in as we head down to the low with follow-through on Monday. So 154.50, 153, weekly time frame bearish candlestick, pulling back and still higher lows. The last consolidation week we saw was that 153 level. So overall, the bulls are still in control on a lot of these charts. We're just starting to see the first cracks in the armor of these bulls. CMG could care less what the market is doing. No surprise there. We've seen that time and time again, not correlating strongly with SPY. And it's a bear flag here on the daily time frame. So our lower high, lower low pattern has been clear for a while now. Breaking 465 was a clear bear signal, and now we have a weak bounce attempt, rejecting from exponential resistance, upper wick of profit taking, and potential continuation to the downside. Make that 457.02 is the support level where if we break it, we confirm the bear flag, and we're looking down at 445 as a key level of support. So overall, bear is still in full control of CMG, even though the market didn't really help too much with that. And on the weekly time frame, loss of exponential support on the verge of a bearish MACD cross and a bearish TCG cross. And this middle Bollinger Band on the weekly is going to be in the upper 440s this coming week, so that will be lining up fairly close to that 445 level, and we'll have to be watching both of those. So I appreciate you watching. Lots to be watching this coming week, and we will check back in tomorrow. Have a great night.